Let's go through some state and local tax terminology first. So, understanding your state and local taxes first and foremost is essential for businesses to operate in multiple states or have a physical presence in different locations. State and local taxes can be complex and can, vary depending on the jurisdiction, which can make compliance challenging. Now, if you have a physical store or if you're physically selling your products and services, this is very important. Let's talk about nexus again. So nexus is the legal term that refers to the minimum level of presence that a business must have in a state before it is required to collect and remit state and local taxes. Nexus can be established through physical presence, such as having an office or employees in that state, or through economic activity, such as generating a certain amount of revenue in that state. There are some nuances and caveats for online or e-commerce businesses, so you'll need to check with your state that you're registered in. Next is sales tax and use tax. So sales tax and use tax is a tax on the sale or use of goods and services. Sale tax is generally collected by the seller and remitted to the state or local governments, while use tax is typically paid to the purchaser when sales tax is not collected by the seller. Income tax is a tax on the income earned by the businesses and individuals. States have varying income tax rates and may require businesses to file income tax returns if they have nexus in that state. Property tax is a tax on real and personal property owned by businesses and individuals. The tax rate is based on the assessed value of the property and varies by jurisdiction. Excise tax is a tax on specific goods or activities such as alcohol, tobacco, and gasoline. The tax is generally paid by the manufacturer or distributor and may be passed on to the consumer in the form of higher prices. And then lastly is tax incentives. So many states and localities offer tax incentives to businesses in order to encourage investment and job creation. These incentives may include tax credits, exemptions, or abatements. Registering for state and local taxes is going to vary by state, but there are some commonalities between, each state. And that's going to be, determining your nexus. So the first step in registering for your state and local taxes is determine your nexus in each state and locality where you operate. Again, nexus can be established through physical presence or through economic activity. Once you have determined your nexus, you can identify the state and local taxes that you are required to collect and remit. Then you need to obtain your tax identification number. So most states and localities require businesses to obtain a tax identification number, this is the TIN, before registering for state and local taxes. The TIN is a unique identifier that is used to track your tax obligations and payments. This is not to be confused with your EIN. This is a state tax number. So the EIN is for federal, the TIN or TIN is for local. Then you need to register with the appropriate agencies. So once you have obtained your TIN or TIN, you can register with the appropriate state and local tax agencies to collect and remit taxes. Each state and locality has its own registration process, which may include submitting an application, providing documentation, or even paying a registration fee. Then you're going to set up your tax collection and remittance procedures. Once you are registered for the state and local taxes, you will need to set up procedures for collecting and remitting taxes. This may include adding tax collection to your point of sale system, so your POS, keeping track of tax rates and exemptions, and filing regular tax returns. And the last thing is stay up to date. So state and local tax laws change frequently, so it's important to stay up to date on any changes that may affect your business. This includes changes to tax rates, exemptions, or filing requirements. You should also ensure that you are collecting and remitting the correct amount of taxes to avoid penalties and interest. Usually they will not change tax rates mid-year. So they might say, hey, starting next year, we're going to be collecting 9%. Whatever it is, they're going to be collecting more or less. It's usually more. There are software programs that you can put, that are embedded into e-commerce or that you can add to your POS system in your physical store that will kind of keep these things on track for you. All you have to do is just ensure that the changes are made. State and local taxes is, a unique topic, so I'm going to go over some of the generic guidelines and tax laws as it relates to a majority of states, but again, you should really consider looking into your specific state and your county and city, wherever you're located. So, filing state and local tax returns, again, is an essential part of staying in compliance with tax laws and maintaining the financial health of your business. So, first, you need to understand your tax obligations. Before you can file state and local tax returns, you must understand your tax obligations in each state and locality where your business operates. This includes determining your nexus, identifying the taxes that you're required to collect and remit, and keeping track of any tax credits or exemptions that apply. Once you have identified your tax obligations, you have to collect and remit the appropriate amount of taxes. This includes sales and use tax, income tax, property tax, and excise tax, depending on your business activities and your location. So each state and locality has its own filing deadline for tax returns. So you have to stay, up to date on what those deadlines are and file your returns on time to avoid penalties and interest. So for filing procedures, each state and locality has its own procedures for filing tax returns. This can include submitting the tax return online, mailing in a paper tax return, or using a third-party filing service. So make sure you understand the filing procedures in each state and locality where your business operates. Then, obviously paying your taxes. So when you file your state and local tax returns, you will typically need to pay any taxes owed. This may include taxes that you have collected from customers or taxes that you owe based on your business activities. So make sure you have the necessary funds to pay your tax liabilities. Generally, if you're filing on paper, you're going to need to mail in a check or some form of payment. If you're doing it online, you'll probably have to provide a credit card or your banking information right then and there. Last is going to be record keeping. So it's important to keep accurate records of your state and local tax returns and payments, and this is going to help you stay in compliance with tax laws and to identify any errors or discrepancies.